in our play, we always believe that strategies comes in many forms, and the way to win in the Forex market is not just tied up to one strategy. There are so many strategies that we can use, and they all have its merit. And to that purpose, we actually invited a trader today to join us and describe and explain to us what is his strategy and how his strategy can actually benefit us all. Without further ado, let's proceed to the interview.
Hi, in Alpha Play, we embrace all sorts of trading strategies, and there is no one strategy that fits all. Every strategy has its merits, and for that purpose, we actually invited one of the traders and collaborators of Alpha Play today to talk to us about his strategy and how he has been performing over the last few years. Apparently, although at a young age, he has already been trading for quite a few years. Let's hear it from the trader himself. Hi, Stephen.
Hi, JT.
How are you doing?
Very well, thank you.
Right. So, why don't you tell us a bit about yourself?
Okay, my name is Stephen, and I'm a graduate from US Business School, and I've been trading for about 7 years now. Started when I was 18, and I've been focused on Forex ever since. After initially being interested in stocks, because I think Forex is a better market. It's lower capital outlay, and I feel that I can understand Forex better. Yeah.
Apart from the capital outlay, what do you think is the key difference between the stock market and the Forex market?
I would say that it's in terms of the liquidity and the leveraging, because brokers require more capital from you if you want to trade stocks. You're going to need more, because the leveraging is not as high, so you're going to need more capital to set aside per trade. Whereas for Forex, because there's a lot of players in the market, it's a lot of liquidity, and they don't require as much, so there's more leverage for you, and you don't need as much to put up per trade.
I see.
Yeah.
So I understand that you do day trading or scalping. Which is it?
You could call it scalping. You should call it scalping. It is scalping.
Right. So it's scalping.
Yes.
Right? Okay. So tell us a bit about this scalping strategy. Firstly, how do you get started in scalping?
Okay, so I focused on a few strategies. When I first started out, I experimented with different strategies: long-term trading, medium-term, and then intraday day trading, and then lower and lower scalping. And I found that anything day trading and below, I really liked, because I don't know. It's just I can't bear to put in money for a long period of time and just wait to see if the outcome is good or bad. Right? I like doing it faster. So I do day trading as well, but scalping is also one of the things I focus on.
So you like the action, you don't like the wait.
Yeah, I prefer the action.
I see. Okay. Could you go in a bit more detail as to what kind of strategies, or what kind of indicators would you use for scalping?
Okay, for scalping, you use moving averages and MACD, as well as the RSI. Right. We'll add in a few more on the course, but I won't tell you what they are now. But mostly, it's to identify points in the price chart where there's going to be a reversal. Overall, you will decide where the trend is heading using a higher time frame. So you know that it's decidedly bullish or bearish based on an H4, H1 chart. Once you've decided that, then you go and zoom in, so to speak, using a microscope to examine a smaller candlestick, which should be an M5 in this case. Right. In some scalping strategies, it can go as low as M1, just so you know. But we'll be using M5, and it's very fast paced. So what we're doing is we're actually watching the battle between the bulls and the bears at ground zero itself. Right, we know that overall, if it's going to be bullish or bearish, then bears or bulls are going to triumph at some point. But you zoom into those candles, you realize that some battles on a smaller time frame, the bears win, sometimes the bulls win. But overall, it's going to go the direction that we've decided is the overall trend. So your scalping strategy will be to find the best entry where it's going to reverse to go back to the original trend. Because
so I understand it goes down to a very small time frame on the mini chart, the M5 chart. So do you think that fundamental analysis is important in your strategy?
Yes, fundamental analysis is important. It is definitely, because it will complement your ability to spot the overall trend and decide where it's heading. Because if you understand the fundamentals of the currency, then you know that if you're seeing an overall uptrend on the higher time frame chart, then you would confirm that with fundamental analysis. You know that yes, that trend is correct and it's going the way it should be.
Okay, thank you. So this is to understand a bit more about you as a trader. So how many years have you traded using this scalping strategy of yours?
For scalping, I've traded for about 4 years.
4 years.
I've been using scalping strategies.
What's your total years of experience in trading?
Trading, I've been trading for 7 years.
7 years. So out of 7 years, you've scalped for about 4 years now.
Yes, I've used scalping as one of my strategies in trading.
Right, nice. So why is scalping? How has it complemented your lifestyle? What's the benefit of scalping for you?
Well, I think the benefits for a trader's point of view is that it helps eliminate this thing we suffer sometimes from, we call itchy finger syndrome, that you just have to trade sometimes.
I understand that.
So if you're trading in a longer term, you have to sit there and watch your trend form and your profit maybe roll it or move towards your sell something. But the point is, you're not going to know the outcome until a certain period of time later. And it can be quite long, right? And during that time, you're not doing much, just sitting there. But if you scalp or do a shorter time frame when you trade, you don't really suffer from this itchy finger syndrome because you're always in on the action. And I feel that if you do suffer from itchy finger syndrome, then you should come for the scalping course, because if you're going to want to trade, you might as well do scalping, because it helps enhance your ability to spot higher probability trade setups.
So who do you think should attempt to scalp, or to learn? Who do you think should learn scalping?
Okay, so I think day traders.
Day traders.
If you are a day trader and your strategy is involving day trading or anything shorter than day trading, then this is definitely a good course for you. Because even if you still want to focus on day trading, you could say that the technicals that we're going to teach in the course will help you find a second chance entry. For example, if you're watching your H4, H1 chart and you wanted to get a good entry, but let's say you missed it, you could always go to the small time frame charts and then look for a pullback retracement and then see that's your second chance entry.
Now, our audience will want to know if, let's say, they are working and perhaps the most active trading time is after work, which is around the US open, around 8 p.m. plus 8 GMT Singapore timing. Would that be a good strategy for scalping?
Yes, of course. In some ways, I think for us traders, we have to stay up late following US hours, but for people who want to trade in Singapore, it's actually pretty good that the US market opens after work, because you can keep your day job, but you can come home after that and still trade. Especially when the US market opens, and we know that in opening of a market and closing are the key points where you normally make decisions whether you want to take positions or not. So yes, definitely.
Great. So what advice would you have for a trader, whether experienced or inexperienced?
Okay, I would think that traders, to starting out, every trader should have 4 building blocks.
Four building blocks.
4 building blocks. I've come with 4 here. I think it should be these 4. And in order of importance, I think first would be risk management. Okay, learn to manage the risk properly. Second is trading psychology. And those 2 actually should really be the first 2 that you master, not the technicals or the analysis. Because if you want to master your risk management and psychology early and get that foundation really strong and nailed down, and then in the long term, if you're a new trader, in the long term, you're going to find that eventually you stick to your risk management and your psychology. Eventually, profits will roll in. If you're an experienced trader, you definitely need to have risk management and psychology, otherwise.
So basically, these 2 are the foundations of any kind of strategy that's going to come to you. Right? So you master this to you master any strategies in the world.
It's the first 2.
Right.
Risk management, trading psychology, definitely.
Okay.
You need to have those 2. And then the other 2 would be trade journaling. Right?
Trade journaling.
Trade journaling is very important for every trader. Journal your trades, because if you know why you went wrong or why you went well, it always benefits you, right? And looking back is very important to do housekeeping and to understand why. And hindsight is 20/20, right? But if you have nothing to look at, then hindsight isn't going to help you very much. So yes, journaling is important.
Okay.
And lastly is don't complicate your analysis. Don't fall for analysis paralysis. Yeah.
Yes.
So you don't need so many indicators on your chart. Just a few will do. You don't have to have 100 strategies, you can just have a few strategies that really work well for you to identify high probability setups.
Okay, can you tell us more about what is your most memorable trade that you have? What's the most profitable trade that you have? Yeah.
Okay, I would think it would be September 2013.
September 2013, that's 3 years ago.
3 years ago, yeah.
Wow, okay.
3 years ago. And like I was saying, I've been using scalping as a strategy for 4 years, right? So I was watching it a small time frame chart 3 years ago, September 2013. And what happened then was the FOMC was making an announcement for the QE tapering. Now everyone was expecting a taper, and it was priced in, and markets were ready for the taper announcement, perfectly expecting it. And the announcement actually was no taper. In the minute that announcement came out, markets just flew. Candles just exploded on small time frames and just went flying. And my trade was, if I remember, it's the Euro USD. So they were pricing in taper. So it was strengthening, the currency was strengthening. But the minute they announced no taper, obviously it suddenly just weakened. So I believe I went in with a large position, right? Instinctively, after trading for that amount of time, you instinctively know where markets are going to go, where the announcement comes out.
Right.
So I went long Euro USD, quite a sizable position.
Right.
Didn't have time to calculate it, and just instinctively clicked. Fastest finger first, I went in, and yes, that trade really sticks in my mind because it's one of those extremely rare opportunities, I would say, where you can say in your account, you more than double your account.
Wow.
One trade, just one trade.
Wow, more than double account in one trade.
In one trade.
Wow. Wow, that's very interesting. Well, it does come once in a blue moon, doesn't it?
Exactly. And that opportunity you only would have found if you're watching a smaller time frame at least.
Right.
So you see the candle really jump.
Right, and you also need to know instinctively, as you mentioned, what happens, what's the economics behind such a news.
That's right, fundamental analysis.
Fundamental analysis. Right. Well, thank you, Stephen. Thank you for a very insightful explanation and description of the strategy.
Hi, my name is Steven, and I'm going to be your coach in Forex Scalping Masterclass. Here's what you will learn from this exclusive masterclass. Firstly, you'll be able to capture 20 to 30 pips consistently on a daily basis, and let's be conservative. Now this is possible because we're focusing on shorter time frames, tighter stops, and tighter take profit levels as well. Secondly, highly flexible trading hours means that you trade only when you are free, and typically the trades don't last more than a few hours. Now this means that like swing trading, you can trade only whenever you want to trade, and this is truly making money when you feel like it. And lastly, over this 2 days program, you will learn to scalp the forex market with easy to follow instructions, notes and guidance, fully provided so that you understand the strategy. And it may surprise you just how easy it is to learn to actually scalp the forex market. I hope you have a better understanding of scalping and the strategy, and I hope to see you in the masterclass. Join me and scalp like the professionals do.